So you want to make a lot of money trading stocks? Then you gotta follow your rules. And if you don't have any rules, then you need to make some. What the hell are you talking about, Ron? What do you mean trading rules? Listen up and let me tell you. If you want to destroy these rich ass yuppies on Wall Street and take everything they've got, then pay attention. And I'll teach you everything that I know about trading. If you just want to be average like most other traders out there and keep losing money and making the same mistakes over and over again, then I guess you'll click away and go to another video. But hopefully you'll stay, because we need to put an end to the rich getting richer, and we need to give the advantage back to the smaller guys. My main goal here is to make you better. So pay attention. Follow the advice that I give in these videos, and I will teach you exactly how to become great traders. No strings attached, no smoke and mirrors, no BS. You may or may not have heard people mention trading rules. Trading rules must be developed in order to achieve consistency while trading. Many people are probably wondering, well, how the hell do trading rules get created? How exactly do you make trading rules? And how do I know what rule is correct? I struggled with this for the first few years of trading myself. I didn't know whether I should make something a rule or not. I didn't know how to develop rules. You're probably asking yourself, what if I make a rule and it hinders my growth or stops me from making money? What if it does more harm than good? Well, I'm here to tell you that it won't. Not if you do it correctly. Since we are all different and we all have different mentalities, we need to develop our rules based off of our own performance. So you don't make rules based off of somebody else's performance, and you don't make rules based off of my performance. Some of my rules might work for you, but you won't know until you track your own trades and get your own results and figure out what you need to alter and what rules you need to make. Rules will be developed over time as you take many trades and you start to see what works and what doesn't. After taking hundreds of trades, you'll start to notice things that you do or things that you don't do that inhibit your growth and keep you from making money or actually cause you to lose money. Whenever you recognize this, you make a rule to keep yourself from doing that. In this video series, I'm gonna go through a few of my rules in each video, and I'm going to explain what the rule is and why I developed it. This will teach you things to look out for and give you a better understanding of how to develop rules of your own. This will help you to become more consistent. It will help you eliminate mistakes. And most importantly, it will help you to make more money. The way this will work is that first I'll explain what the rule means, and then I'll explain why it was necessary for me to develop the rule. All right, let's go. First rule that I have on my list is that the stock must have a good daily chart. If the stock doesn't have a good daily chart, then I will not trade it. There is no way I am going to put it on my list or trade it, no matter what. Here's an example of what I mean by a good daily chart. So KR today was an example of a stock with a good daily chart. If you look at the daily chart, you can see right here, KR was breaking over the 9 EMA, the 20 SMA, and the 50 SMA. It was almost ready to clear this resistance level, this blue line, and it had room to move from one level to the next, which means you had this big area right here, this void, in between this resistance level and in between this resistance level. So this resistance right here was at 46.67, and this resistance level was down here around this area of like 45 to 45.50. All right, KR had a catalyst because it released earnings. It had a good amount of volume pre-market, and it has a good average daily volume. You can see right here, the average daily volume is around 5 million shares. So KR is an example of a stock with a good daily chart. Look what happened intraday. KR moved higher up to that resistance level, exactly what I thought, and look where it reversed. It reversed right at that resistance level, threw in this inverted hammer, and then faded off the rest of the day. So that's an example of a stock with a good daily chart. The reason why I made this rule is because too many times I would trade a bad daily chart, and then I would get into a stock that either wouldn't move, it would just barely move, like maybe just a couple cents here and there in between a range, and you don't ever get a really big range or opportunity to make money. Like on KR right here, you could have shorted this up here at around 46 and then took it all the way back lower to like 44.80. Okay, so you have a big range in price that you can make money on. Now let me show you an example of a bad daily chart and why I made this rule. AMD's chart is not too bad, but it is not the best. So the stock right now is actually in between support and resistance. You had this previous resistance level and the 200-day moving average, and the stock broke over that and pulled back to that area. Since that was previous resistance, it may try to act as support, as well as the 200-day moving average is a very significant level of support. So you're kind of like at a support level, and then you have resistance levels now overhead in the form of the 20-day moving average and these prior pivots. If you look at the previous day's price action, it's kind of back and forth, like whippy. There's a lot of tails, and then right here today, this was gapping down into this range. If you look, this was last Friday's range, okay? If you go back to last Friday, which is right here, you can see the stock's gapping down into that range, all right? So it's kind of like in between a support level and a resistance level. You're not very far above the 50-day moving average. So based on the prior activity in the last few days, as well as the daily chart where it's sitting, to me, this was not ideal. There was no type of catalyst or anything like that. It was just another stock that is just gapping down slightly lower. It didn't have a big gap pre-market. There was nothing that indicated this would move a lot to me. This is exactly why I don't like to trade these type of stocks, because if you look at the intraday action, you can see what happens. There's really not much room to profit. There's a very small range in price, and the candles are big and whippy. If you try to short this, you only get so much action before it comes back up and tries to stop you out. Then if you try to long it, well, then it goes backwards again, right? And the whole time you're fighting this. And if you enter a trade, a lot of times you can sit in that trade all day long, which is what I do not want to do. If I sit in a stock that's there all day, the stock's moving higher, blasting higher, and I'm riding the trend higher, getting a ton of money. So I don't want to be getting in trades or getting into stocks that are just going to go back and forth all day long or take hours and hours and hours to never give me a profit, or it could even come back down, stop me out, and then move back higher, give like a false long entry, then stop you out again. So that is not ideal for me. So that's my rule number one. Make sure the stock has a good daily chart. The second rule I have is do not chase. Right? What that means is that if a stock has like 2 or 3 candles of the same color right after another, I cannot enter that in the direction of the candles. Let me give you an example. Another one. So this is an example on AEHR of a chase. All right, so let's say I'm going to short AEHR. It's gapping down below this 50-day moving average, and I want to look for a short pattern. I see it moving, and then you've got 1, 2, 3, 4, 5, 6, 7 candles in a row. I'm thinking I'm getting antsy because I'm not seeing a good pattern, so I just want to jump in and see if I can take this short. At this point, it's so extended to the downside, it's so oversold that most likely it's going to reverse. But this is what a lot of people do. They see the stock running away. They no pattern is forming for them, so they just want to get in. So let's say you get in right here at short under this hammer at like 24.11. It breaks. You're waiting for your profit. The next thing you know, okay, wait, it's going the opposite direction, going the opposite direction. Now look, this thing came all the way back up. And that's because it was extended. So a chase would be getting in the same direction as the stock when it's already up 3 or more candles in a row. If the stock is up 3 or more candles in a row, a lot of times I will just pass on it, or I'll wait for another pattern back in the same direction. Wait for this thing to pull back, or I'll even take it the opposite direction, because we don't want to be getting in when the stock is going to reverse on us. The best thing to do is wait for patterns to form. If not, pass on the stock. So that's rule number 2. No chasing. The next one is important. Rule number 3. The reason it's important is because so many people that want to be traders, they want to pay so much attention to the news, okay? News doesn't mean anything for day trading. All news should mean to you, if you're day trading stocks, is that the stock has a catalyst, and the catalyst is making sure that there's volume and people interested in the stock, and it's going to have a bigger range than normal. I try not to know too much. I don't look too much into it. All I want to know is that the stock has a catalyst. Now, here's the reason behind this. KR today had earnings, all right? If you were to read the news beforehand, let's see what it says. Kroger tops Q4 earnings and revenue estimates. Let's click on this and let's just see what it says if we read the actual article. So if you read the article, it just goes into detail telling you how Kroger beat earnings and it's now an earnings surprise and yada yada. It just tells you a bunch of positive stuff about the stock. It does not matter what happens with Kroger earnings if you're a day trader, okay? The only thing this does for me and for most every single trader I know and the traders I teach happens over and over again until they finally learn not to pay too much attention to it. What happens is You think that the stock is going to move higher. You get this positive outlook in your head in the pre-market and you think, okay, Kroger's got good earnings, it's got to go higher, it's got to go higher. So I didn't look at the headlines, I just looked right here. Earnings, March 2nd before the market opens. I know it as a catalyst. I don't know if the earnings are good or bad, and really, I don't care what they are. So what happens is, if you know the news and you read this whole article, you start to get all hyped up before the market opens, and you think that, okay, look, Kroger has earnings, it's got to go higher, it beat earnings, it's going to do good today. Then you miss the real good moves, okay? The good move, in my opinion, on Kroger was not the long move, the move that went higher. The good move on Kroger was the short. And if you look right here, where is the majority of the price movement? It's not up. Right here it moved up 156. Right here it moved down 241. The better move and the easier move was to wait for this to hit resistance and then form a short signal candle and then take that under the candle for the move lower. What happens to me and a lot of people, believe it or not, is that you're scared to short it because you think it's going to keep moving higher. You think, okay, this thing has good earnings, it's going to move higher, it's going to keep moving higher, and you're scared to short it. So what you do is you keep looking for long entries. So you take this long entry right here, and then the next thing you know, the price goes against you and you're out of the trade for a loss. What happens is in the pre-market, by reading this news and gathering all this information from other people that are saying, oh, Kroger's has good earnings, it's got to go higher, it's got to go higher, you create this bias in your mind. And instead of looking for the short, you can only think about the longs. So you take one long setup. Next thing you know, you get stopped out and you lose money. So then, instead of taking it short where you should have taken it, you start looking for more longs because of this bias. You think it's got to go higher. So right here, you see a green candle or something form. You see some sort of strength. You take it long. Next thing you know, you're stopped out. Okay, then you see another one. You take it long. Okay, wait, you're stopped out. Wait, you take another one. It's got to reverse. It's got to reverse. It's got good earnings. You take it long. You get stopped out again. So you keep trying to trade them in the direction of this news, and you keep getting stopped out and losing money. And instead, what you could have done is just looked at the chart like you usually do without reading news, look at the technicals, and then you look for the short pattern right off. And had I been listening to other people that probably don't even know how to trade, I may have convinced myself that this stock had to go higher and I would have missed the good move. Even still, after trading full-time for almost 9 years, I still rarely look at the news. A lot of times in my chat room, people will talk about news and they'll say things, and I pretty much blow it off. I know that they're probably just trying to talk about it or they think that it's positive, but for me, it can actually affect my trading. Alright, so that's when that rule is created. That gives you an idea of how I create rules. I'm curious to hear about your trading rules. So if you have any that you think can help anybody, then please leave them in the comments. Let me know if you like this video and give it a thumbs up, and I'll see you in part 2.